Coming up today on RoxomTV News, we got Jack Mallers' shiny new Bitcoin treasury company face plants 25% on day one because apparently public markets don't do hopium without a discount. Nvidia just got permission to sell powerful AI chips to China again, proving geopolitics is flexible when revenue is involved. And Paramount launches a $100 billion hostile bid for Warner Brothers, turning the streaming wars into a full corporate cage match. All that and more right now on today's show. Let's go. Happy Tuesday, everybody, and welcome back to another episode of RoxomTV News. We've got a lot to go over today, so let's get started with our first big story of the morning. So Warner Brothers Discovery thought it had finally found a clean exit from its merger hangover. Step one, spin off the aging cable junk drawer. We're talking CNN, TNT, TBS, Discovery channels into a separate company called Discovery Global. Now step two, hand the crown jewels, the studio, HBO, Max, and a century-deep library to Netflix for about $72 billion in cash and stock, valuing the whole thing at around $82.7 billion bucks, including debt. Now, under that Netflix deal, Warner shareholders would walk away with roughly $27.75 per share, part in cash, part in Netflix stock, and Hollywood would wake up in a world where Netflix wasn't the only streamer on your television. It would be a full Hollywood studio that happens to also own Harry Potter, DC, Friends, HBO, and its own originals all under one single roof. Now, regulators were already blinking hard. Trump was already saying the deal could be a problem, and rivals were game planning how to live in a world where Netflix suddenly has the keys to half of all of pop culture. For about 5 minutes, the story was Netflix wins Warner. Then Paramount Skydance came through the wall like the Kool-Aid Man. Oh yeah! On Monday, Paramount launched a hostile all-cash bid for the entire Warner Brothers Discovery at $30 a share, valuing the company at roughly $108.4 billion, including debt. So instead of Netflix buying the spun-off studio assets, Paramount wants the whole house. We're talking the studio, streaming, cable, all of it, and is waving a bigger headline number and more cash in front of shareholders. They've been complaining for weeks that Warner ran a rigged contest, treated Netflix as the favorite, and ignored higher offers. Now they're backing those complaints with a term sheet. Behind Paramount, you've got David Ellison in the CEO chair, Larry Ellison's fortune in the background, sovereign wealth funds from the Gulf putting in equity, Jared Kushner's affinity partners involved, and Wall Street banks promising tens of billions in debt. On the Netflix side, you've got Ted Sarandos and Greg Peters pitching Regulators a pro-consumer marriage, quietly reminding everybody that they already have a signed deal and that a structure that keeps jobs and brands fully intact. Here's a clip from CNN that breaks it down even further. Let's take a look.
Tried to reach a deal with the Warner Brothers Discovery board late last week. And as you were saying, Dana, that was not successful because the Warner Brothers board decided Netflix. And the Ellisons, who control Paramount Skydance, believe that their offer was superior to the Netflix offer. And they feel like they got short shrift. And so their choice was at that point to either, pack up their bags and go home, or to do what they're doing, which is to, quote unquote, bring their offer directly to Warner Brothers Discovery shareholders, which is Wall Street argot for going hostile. Mm-hmm. And we haven't seen anything quite like this in maybe 25 years on Wall Street, not since Pfizer tried to jump a deal that Warner Lambert had struck with American Home Products. So this is kind of big news.
Now, Donald Trump is somewhere in the middle of all this, having met with Sarandos, taken calls from Larry Ellison, publicly warned that the Netflix deal might be an antitrust problem, and privately hearing arguments from both sides about competition, jobs, and CNN. So this isn't a polite auction, it's a live ammo fight over who controls one of the last great media crowns, and whether that crown ends up on a tech-driven streamer's head or on a legacy studio that's wiring itself to foreign money and a massive new debt stack. And once you see how strange that lineup is, it becomes easier to understand why markets, regulators, and everyone in Hollywood are suddenly recalculating their odds. So once you move past the red carpet names we've talked about, this deal is a giant math problem. When two serious buyers are willing to go north of $80 to $100 billion for the same asset in an industry everyone says is structurally broken, it sends a signal through every spreadsheet on Wall Street. The first shock, of course, is valuation. If Warner is worth that much to multiple bidders, it forces investors to reprice other studios and streamers. Stocks like Paramount, Lionsgate, AMC Networks, and every other mid-tier content shop suddenly look less like fading brands and more like potential lottery tickets. You see, sympathy rallies in anything that could plausibly be bought, while the potential acquirers trade heavier because the market knows someone is going to end up overpaying and over-levered. If Netflix wins, the market has to digest the idea that the cleanest, most disciplined streamer on earth is turning itself into an old-school content conglomerate almost overnight. Now that means analysts will start cutting into free cash flow forecasts, debating how much debt is too much, and asking whether Netflix can maintain its margins once it owns an expensive studio, theatrical operations, and a bigger payroll. Now, if Paramount wins, the leverage alarm gets even louder. An all-cash, highly debt-financed takeover leaves the new Paramount-Warner hybrid with one of the largest debt piles in all of media, a massive integration job, and a portfolio full of legacy TV that is not exactly in its prime. Credit desks will focus on interest coverage, cash flow stability, and whether the promised synergies are real or fantasy. If those numbers look weak, borrowing costs go up not only for Paramount, but for any media company that looks similarly stuck between yesterday's cable world and tomorrow's streaming world. Then, of course, there's the regulatory drag. See, deals of this size are never quick. You get months or years of hearings, political interventions, and conditional approvals. That uncertainty widens merger arb spreads, spikes volatility, and makes big media harder to own in size for institutions that prefer predictable exit timelines. And underneath all of that, a new risk premium appears: presidential interference. Investors can price in ad cycles, subscriber growth rates, and cord cutting. They cannot reliably price in how is the president feeling about Ted Sarandos this week and what did Larry Ellison say on the phone. Now, once that becomes a recurring factor, discount rates rise across the entire sector. At the same time, the strategic message is quite clear. If you're not Netflix, Disney, or some future combined giant, you are probably either getting bought, merging, or shrinking. So while markets are trying to figure out who wins Warner, they are also starting to sort everyone else into two buckets: future buyers and future prey. And as investors argue with their models, the actual bidders are out telling their own version of why they should be trusted with the keys. Now, Netflix's message to the world right now is basically, relax, we already did the hard part. At that UBS investor conference in New York, Ted Sarandos and Greg Peters walked on stage knowing everyone in the room had read about Paramount's hostile bid that morning. They opened by saying the move was entirely expected, then immediately reminded everyone that Netflix already has signed an agreement with Warner. "We have a deal done," Sarandos said, and he said it like someone who fully intends to see it through. Now, the pitch is built around three audiences: regulators, shareholders, and Warner employees. For regulators, they emphasize that they aren't planning to gut the place. They want to keep the studio, HBO, and other divisions operating largely as they do now. No shutting down theatrical. No melting HBO into generic content sludge, and no chopping things up for parts. Sarandos even leaned into theatrical releases, saying that when the deal closes, Netflix will suddenly be in that business for real and intends to use Warner's distribution machine to keep putting movies in theaters. For HBO, he framed it as a chance to stop trying to be all things to all people. HBO under Netflix can stay HBO. Prestige, selective, focused, because Netflix is already the general entertainment fire hose. For shareholders, the message is about continuity and discipline. You see, Netflix is telling the market it isn't doing this to chase ego or empire, but to add 3 valuable businesses that fit neatly on top of the content and distribution engine it already built. They stress no big layoffs, no drastic consolidation, and no sudden pivot away from the model that got them here. They even brought slides to push back on the monopoly narrative, showing Nielsen numbers where Netflix trails YouTube and Disney in total TV time. Now the subtext is, we're big, but we're not some unstoppable monster that you need to chop up. On the political front, Sarandos addressed the Trump angle directly, saying the president cares most about American jobs and that Netflix's production footprint creates a lot of those jobs. The tone throughout was calm, controlled, and slightly bored with the drama, which is exactly what they want. Now, Netflix wants regulators to see Paramount's hostile tender as noise, investors to see this as one more calculated move from a company that has navigated tough transitions before, and Warner's workforce to see them as the buyer least likely to blow everything up. But even in Netflix's pitch, if Netflix's pitch lands, there's another scenario they have to game out. Because if they win Warner, every other mid-tier streamer wakes up needing a survival plan, and that is where the Comcast conversation starts to matter. Okay? So if this ends up with Netflix walking away holding Warner's Studio, HBO, and Max, Paramount is not wandering off into the sunset to shoot another Top Gun and call it a day. It will need a plan B, and fast. And that plan has a familiar name: Comcast. You see, Paramount and Comcast have already kicked the tires on each other. Earlier conversations about content deals and bundles were basically, is there a way to stop Paramount Plus and Peacock from slowly bleeding out on the parallel tracks? Well, if Warner is gone, those chats go from casual brainstorming to serious M&A talks. On their own, both companies are stuck in the same awkward weight class. Paramount Plus has tens of millions of subs, but is still fighting for durable profitability. Peacock has respectable growth, but relies heavily on sports, bundles, and constant promotional gymnastics to keep attention. Neither is big enough to stand shoulder to shoulder with a Netflix-Warner mashup or Disney's empire, but together they start to look like something closer to a third pillar. Now, a merger would combine Paramount CBS broadcast network, Nickelodeon, Showtime, Paramount Pictures, and flagship franchises with Comcast, NBC, Universal, theme parks, and Peacock. Now that gives them the scale in sports, scripted content, reality news, and kids programming. It also gives them one monster linear TV footprint that might extend the life of the old bundle long enough to milk a few more years of cash while streaming finds its footing. Financially, the logic here is survival, not vanity. Paramount is carrying heavy debt from earlier deals and is under pressure from activists to do something transformative. Comcast is watching cord cutting chew into its cable business while it pours billions into Peacock. A merger gives both companies more ways to spread costs, more leverage in negotiating with talent and tech platforms, and a narrative that sounds more like we're building a long-term competitor and less like please ignore those streaming losses. Now, the flip side is regulatory and political heat. You see, a combined Comcast Paramount would control a huge share of U.S. primetime viewing, multiple studios, sports rights, broadcast networks, and a big chunk of broadband infrastructure. And that is exactly the sort of thing that lights up antitrust radars. You see, culturally, you got Paramount's Hollywood DNA colliding with Comcast's very operational East Coast numbers first style, and those marriages are never seamless. But if Netflix locks Warner down, standing still is the more dangerous option here. So while Paramount is publicly throwing punches at Warner's board with this hostile bid, it knows that if it loses, it probably is heading right back to the table with Comcast to talk about the only other path that keeps it in the heavyweight division. And if you think regulators are nervous now, wait until they have to weigh that one, okay? And then the more you zoom in on Paramount's bid, the less it's starting to look like a classic studio trying to stretch for growth, and the more it looks like a geopolitical group project. You see, at the heart of the financing stack is Jared Kushner's affinity partners, side by side with sovereign wealth funds from Saudi Arabia, Qatar, and Abu Dhabi, plus a huge slug of debt banking from places like Bank of America, Citi, and Apollo. Now on paper, Paramount's filing does all the right legal yoga. The Gulf investors, along with Affinity, are taking non-voting equity with no governance rights, no board seats, and no direct control. Everyone involved knows regulators, Congress, and watchdog groups will read that line 3 times over. And the message is, relax. Foreign governments are not going to be programming CNN's primetime. In reality, perception is the problem here. The sense that Trump-era political networks and characters in U.S. corporate life. Layer on Larry Ellison, one of the richest people on earth and a longtime Trump ally, calling Trump after the Netflix deal was announced to argue that Netflix would hurt competition and sending David Ellison to Washington, reportedly promising changes at CNN under Paramount-owned Warner. Now, that line up with Paramount's public argument that its bid has a smoother regulatory path because it is not a big tech platform and is more aligned with Trump world's idea of competition. You can see how they think this story is going to play out, but every one of those details is also a reason for regulators and lawmakers to dig deeper. Even if the non-voting structure is airtight, the optics of Gulf wealth funds and Trump-adjacent money bankrolling the future owner of CNN and HBO is political oxygen. You see, critics will argue that you don't need board seats if you have access, relationships, and leverage through financing. Supporters will argue that this is normal global capital flows and that keeping Warner out of the hands of a tech giant is the bigger competitive win. Either way, Paramount isn't only asking regulators to bless a giant media merger, it is asking them to be comfortable with the fact that the control, financing, and political narrative around one of America's biggest cultural assets are now deeply entangled with Trump's circle and with foreign sovereign capital. And that is where the antitrust cops start to look less like a who is playing more and more at whether either option fits inside the actual law. All right, so what do we got here? And then there's more to this story. It's a long one. So if you hand this whole mess to a pure antitrust nerd and strip out the personalities, the conclusion is, well, not subtle. Under the Clayton Act, mergers that may substantially lessen competition or tend to create a monopoly are supposed to be blocked, and both of these deals check a lot of those boxes. Take Netflix first. Netflix and Warner's streaming business compete head-to-head in premium television and films. They both bid on big projects, fight for top talent, and charge subscriptions for essentially overlapping offerings. Now combine them, and you remove one of the few meaningful independent rivals in high-end streaming. That makes it easier to raise prices, harder for creators to negotiate, and reduces the pressure to innovate. Culturally, there's also a concern that Netflix's efficiency obsession and Warner's willingness to take weird swings will end up compromising each other until everything feels like the same algorithm-tested middle. That is not what competition is supposed to produce. Now, let's look at Paramount. A Paramount-Warner combination does the same thing in both streaming and theatrical film. These are two of the last major studios standing that still finance and distribute big movies, and they both run streamers chasing the same viewers. Now you merge them and you shrink the field in 2 markets at once. Add in the fact that Warner is in the position largely because of earlier mergers that loaded it with debt, AT&T's misadventure, then the Discovery tie-up, and antitrust folks see a pattern. A company makes a bad merger, ends up over-levered, and then claims the solution is yet another giant merger, this time but with a direct competitor. Now, from an enforcement perspective, that's like rewarding the arsonist by letting them move into the fire station. The counter-argument is always, but if you block this, Warner will struggle. Well, the answer from people like Tim Wu is great, then find a buyer that isn't a direct rival or use the breakup fees to fix your balance sheet and stay independent. If the Netflix deal dies, Warner gets a multi-billion-dollar breakup check. If Paramount fails under the similar terms, they get the same story. So in those worlds, Warner spins off the cable ballast, keeps the studio and HBO, and has a shot at being a leaner, a debt-light player instead of someone's oversized trophy. And the antitrust position, boiled down, is actually pretty simple. This isn't about picking Netflix over Paramount or vice versa. It's about whether the country is willing to trade away another chunk of real competition in exchange for helping a debt-burdened company clean up its last round of bad decisions. And under the law, the answer is supposed to be no. But when you pull all of this together, the Warner bidding war is a lot bigger than just one studio sale. It's a referendum on how much power we are comfortable giving a handful of companies over what the world watches and reads. We got Nolan Bowerly hanging with us today. Nolan, how are you? Happy Tuesday. Thanks for joining us. You said you're in Abu Dhabi. What's going on there?
Oh, we're here with Bitcoin Mina. So all these quotes you hear from Michael Saylor meeting with all of the sovereign wealth funds in the area, all the same guys that are buying all the American media products that you were talking about. That was very informative. Thank you.
Yeah.
I didn't know that many details of it. I have a few other details that I can probably add, but that was a very complete picture you gave. So thank you very much for that. I feel up to date.
We're doing the deep dive. Yeah, well, let's talk about it, Nolan, because this whole thing is just getting more and more interesting with each passing day. Because right now, we have two bidders, right? One's willing to pay $80 billion, the other one over $100 billion for an asset in an industry everyone claims is structurally broken. What is that telling you about how mispriced the entire media sector might be right now and how distorted our capital markets have become? And we have these bids that are so far apart. I mean, 80 and 100 billion, that's a big gap to close. What is that telling you right now?
Yeah.
What's your read on this, Nolan?
Well, that I agree with that. I mean, but still attention is currency, right? So people realize that these assets are very valuable. And, when you see, because one of the details I think that I wasn't sure about when you were discussing it, because I was under the impression, and in fact, I checked it out, so I think it confirms that Saudi Arabia is involved in both bids. So they're behind Netflix with the cash, as well as, but it's not the same comprehensive Gulf region, it's just the Saudi Public Investment Fund. Because when this was a real big story when MBS was in town, I had always attached MBS's desires to the Netflix bid. So that's when you were describing that part of the capital coming from both parts, I was a little confused, but it looks like they're different funds, but a part of the Saudi fund is also in the Netflix one. So now, for me, I want to just go to the tiebreaker. Whoever builds the Snyderverse is who I want to win. So I don't know. Can we settle it that way? Can we settle with whoever does Snyderverse is the winning bid? I don't know.
You're lying in the sand.
Yeah. But yeah, so on the capital markets front, yes. And I think what it is, where that capital markets distortion is coming from, is what you're alluding to. To me, I see this as existential threat to Paramount. I don't see how Paramount can continue to be a big fish if it is going to be the whole Disney, ABC, and then Netflix with Warner Brothers really does turn itself into something of those. You end up getting two superpowers and a bunch of European EU states trying to compete over the leftovers, right? So to me, it makes a lot of sense. Paramount, if they don't do this, it's over. And now the other parts of the whole transaction, as far as I understand, all Netflix got was exclusive negotiating time frame in order to close the deal. That's what the auction was about. It wasn't about winning the purchase. They of course try to meme it into existence with press releases, but they're supposed to be in negotiations right now, as far as I understand. So Yeah, like
Hmm.
they said in Wall Street, though, they expected the Paramount bid and agreed. Like if Paramount doesn't do this, I don't see what's viable going forward. Tom Cruise is old, and as much as I
Yeah.
love him and the last movie star in the world, he already shut down the Mission Impossible series. And I watched the movie finally on the flight here. I let him down and didn't go to the
Hmm.
movie theater this summer, unfortunately. But I'm
Oh, how could
generally
you?
a big fan of the series and didn't really think the last one was that great, unfortunately. But what I did think
Yeah.
was, they don't have much coming out from there anymore. I don't see what they have left.
No.
Star Trek isn't what it used to be. That's not really viable. There's not going to be, they lost Indiana Jones. That used to be theirs. They used to have Indiana
Yeah.
Jones as part of it, but that got tied with the Netflix, with the Lucasfilm deal. So yeah,
Right.
this is a changing industry, and this is survival. This is survival.
I've got a theory. You want to hear it? I was talking about it. We were
Yeah.
discussing this story before some of this new info came out. We had Cedric Youngelman on the show yesterday. And it occurred to me, I think what's going on here. The reason I think that Paramount would be willing to pay such a premium over what Netflix does is because this is truly a battle of IP for the future of AI. That's what I see happening. I see every of these big companies trying to just snatch whatever IP they can, because when the AI gets good enough, they can just say, oh, I have this series, let's put it in AI and just produce whatever we want. So we're at this stage right now where I think good IP is going to be becoming so much more important, even more than past times, because we're going to be able to churn out stuff and personalize stuff. Like if you own Star Wars, in probably a couple of years, you're going to say, hey, I'm Nolan, but I want to be Boba Fett in the Star Wars series. Write me into it or something. That is going to be a very real thing. So I think right now it's a grab for the middle. It's like hungry, hungry hippos. Who can get all the IP? And I'm kind of thinking that's what's going on right now. What are your thoughts on
Yeah,
that? Am I off base? Because
that's
I very well could be.
no, no, no. That's what Bob Iger said recently in relation to what
Mm,
they hope to do with Disney. They did explicitly telegraph user-generated content with AI being integrated into their IP. So that looks like it's happening. And
hmm.
indeed, I am a pretty big addict of some of from when they were terrible, of the Star Wars little vignettes they're making of 2, 3 minutes of parts from the books. Because I was a big expanded universe reader after Revenge of the
Right.
Sith came out. So I read all those books. And when it got erased, when the Lucasfilm acquisition happened in 2012 with Disney, I'm not a fan of Star Wars Disney. I haven't really enjoyed much of it. I give most of it a chance, but
Mm-mm.
it's pretty forgettable and did not like the sequel trilogy at all. And so that content has actually reinvigorated my interest in some of the Star Wars lore, and I could see how it's working. It's getting really close. They're not far now. Now, what I want to add to that,
Yeah.
though, is what you said about IP, because remember, intellectual property was born with the printing press, and it's a result of the
Right.
printing press. That's how it happened. People could print things and copy them and make facsimiles very quickly, so they developed intellectual property around the printing press and its invention, 500, 600 years ago. So my law school thesis, when I graduated, and you have to write these papers when you graduate, right? So I did mine
Yeah.
on more or less that thesis. Now, it was mostly inspired from Michael Crichton, who believed the same thing. So Michael Crichton was big into
Mm.
gene patenting as a story. And so what I thought
Mm.
was, and I wrote my thesis on that, as the printing press dies, intellectual property will also die with it. Copyright will also die. So indeed, I think no matter
Hmm.
what, there is some sort of I don't know if they can keep it. It looks like it'll be tough, but it is existential on all levels. That's why you're seeing this kind of money being produced, because it's the end of the road after this. It's very hard to see past. I do think you're going to get decentralized content, but why would someone need to ask permission? No one on YouTube making those videos right now needs Disney, and they're not quite at the level where they're going
Right.
to go viral on their own, but they're not far. And if they can go viral on their
Hmm.
own, it's going to go viral on its own. And so why would you want to share it with Disney? So I agree. I
Yeah.
think it is exactly that. You're trying to gather these IPs. It is an IP war. When you look at the IP, I mean, that was the reaction when Netflix got it. It was like, oh my God, look at these series. They're getting Harry Potter, Star Wars, not Star Wars, Harry
Yeah.
Potter. I mean, the list is crazy, right? It's just everything.
Heavy
And
hitters.
so
Yeah.
heavy hitters. Now, I don't have any skin in the game. I do like that there's competition, and the one thing I'm very suspicious of as well is, Netflix's model is I don't want to like thinking analogies, but it would be similar to Amazon promising please, I promise I'm not going to shut down retail stores. They'll go out. Imagine they went out and bought like a bunch of retail stores. No, we like retail. Maybe for a couple of years, right? Now they do have a storefront. They have Whole Foods. So my argument has inconsistencies. That's why thinking in analogies doesn't work. But still, you can imagine there are a lot of jobs attached to the studio model, and you can't assume commitment to the movie theater release studio model with Netflix. You just can't. They have no incentive to do it. We've seen them not care about that stuff before. It makes no difference to them. So this is a big part of American culture. And so these are great titans of American history, Metro Goldwyn Mayer. And, I think Trump in his comments did take time when he was alluding to, I'm not sure if I'm going to approve it. He did talk about the founder of Netflix being in that category, being in the category of the great American innovators in content, and saying, good for him. He's done a lot. And I think it's impressive. But maybe it affects the market too much. So I don't know what the answer is. I don't have a lot of optimism in intellectual property being something that's going to be sustainable going forward. So, but I agree, it is a grab of IP, and we'll see how it goes from the bid. But I think it is everyone's motivated by existential angst here.
Yeah, and I'm going to wrap this one up real quick because we're going to move on to our next story. But aside from IP too, I got a feeling, we're talking about kind of making everybody in the world a creator. They're going to be farming ideas from everybody, and they'll probably pay them nothing like TikTok does. You put a video, it gets 1 million views, you get like 60 cents. I see that happening too. And they're just going to just steal ideations from random people because it's the Shakespeare monkey typewriter theory. Eventually someone's going to put out something great and they're going to be there to take it. But let's move on to the next story. We got a lot to talk about. So hang 10 here, Nolan. As Vladimir Zelensky is heading into talks with Washington, carrying a message that Europe helped shape. You see, after meeting leaders from the UK, France, and Germany, Zelensky says he'll present a revised 20-point peace plan to U.S. officials today. Now, the timing of this matters because diplomatic pressure has been rising on all sides to show movement, even as core disagreements remain unresolved. Kiev made one position crystal clear, however. Ukraine will not cede territory, including areas Moscow has demanded as part of its earlier draft proposals. European leaders backed that very stance, insisting any agreement must include strong security guarantees, continued military support, and the use of frozen Russian assets for reconstruction. Or in other words, no paper ceasefire without real enforcement behind it. From a market's perspective, these talks are about risk premiums as much as peace. Even the perception of coordinated U.S. and European alignment can reduce volatility in European bonds and equities, particularly for countries closest to the conflict. Energy markets are also watching closely. A credible path toward de-escalation could ease gas prices, volatility, and inflation pressure across Europe, while a stalemate keeps supply risks firmly on the table. The reality, though, is that territory remains the hardest issue here. If negotiations stall again, defense firms and energy-linked companies may continue to attract investor attention, while reconstruction in emerging European markets remain sidelines. Capital tends to wait for clarity, and right now clarity is in short supply. Now, this meeting won't end the war, but it will signal whether diplomacy is converging or drifting further apart. And the direction that signal points will shape market expectations well beyond Ukraine itself. We're bringing Nolan back. Nolan, Zelensky is coming to Washington with a peace plan shaped alongside European leaders while explicitly refusing to cede any territory. Given where the war stands today, does that position strengthen Ukraine's leverage or freeze diplomacy in place? What are your thoughts?
No, dead on arrival. Dead on arrival. It's not going anywhere. Go back to the meetings last week when you saw America and Russia meeting bilaterally. Don't forget who was in the wings, who we only found out a little while later. China was there. So you had the three actual superpowers of the world, China, America, and Russia, together negotiating what was going on there. And remember, before Macron went to this meeting at 10 Downing Street, he had just been in China where he had to basically pay tribute and kiss the ring. He was bowing to the Chinese. They're not in a position to ask for any of this stuff. These three countries are far too weak to do any of this negotiating. I believe it'll continue to go bilaterally between China and America, essentially, because even Russia isn't really sovereign in this. Without China, they're nothing. So this really becomes a US-China decision. And with the amount of corruption now being uncovered in Ukraine, they don't have the cards, as Trump said. They're probably not going to be at the table. This will be dead on arrival immediately.
And you have a good feel for the geopolitics and all of this. Is the big reason with or at least for like maybe the United States, like, is it a big deal if they were to like give the Donbas to Russia? Because that kind of sets a precedent, right? And like you said, China is waiting in the wings and they're looking at Taiwan with, they're salivating over it. So what's kind of the danger there? And what is the U.S., do you think, trying to do right now? Because we want to end this, but we also can't set a dangerous precedent for the future, especially when it comes to China.
Yeah, the precedent stuff is there. That's definitely important, no doubt about it. But what I see that's more relevant to how it's going to go in the future, right? Even China, with its negotiations with America, it's our next story, but I'll preclude it a bit, the chip buying thing, right? So America still holds a lot of cards with China. And what they forced China to do, they've already engineered their way out of their beholdenness to China when it comes to some of these rare earth materials and some of these other products that go into the microchips. So indeed, we're on a different plane for what's, happening. But even go to the Ukraine situation, with all this Ukraine censorship, sorry, not Ukraine, EU censorship story that's out there, right? This EU censorship story, or censorship globally of the internet, even by American partners, when we saw the Twitter files revelations about all these units going into censorship and all kinds of the different, well, I forget the names of them, but the safety and the safety rules or whatever they use to censor. A lot of the people commenting on what's going on with the censorship story tie it to the 2014 Russian, or the election in Ukraine, the referendum about whether or not Ukraine was going to be European or Russian. And of course, that election, that referendum went Russia's way. And so the internet before that, by a lot of governments, they embraced the Wild West of the freedom of speech and all that. But there are many people like Mike Benz, for example, who's a really great architect of the censorship apparatus around the world, underlines that it begins in 2014. They lost the referendum where that part of Donbass and these places did democratically say, now, was the election credible? I don't know. I can't verify it, so I don't think so. Probably not. They won by a lot, but it is ethnically Russian, so I believe they would win, right? And so a lot of people think that the entire censorship world, all these EU censorship stories you hear about today, have their origins actually in 2014 because of the referendum about whether or not Ukraine will be split into. And so to this day, I think the best solution is to create commercial arrangements where you have Americans and Russians working together to resuscitate and revitalize, because right now it's a wasteland anyway, right? So if no one gets to declare it, the Donbass and all this, well, okay. I think we can last with it being a temporary neutral zone fix, let the place stabilize and figure out what the people want themselves in a few years. I don't see any other way out of it. That's why I think all of Zelensky's stuff is dead on arrival. I mean, there's no way the Russian sovereign funds, as a Bitcoiner, of course, I would love to see Ukraine steal or take, or however you want to, whatever euphemism you want about the sovereign funds being possessed and seized, is good for business, right? In our business anyway, in the Bitcoin world. So as terrible as it is, it's good for business. So, you don't want to see it, but it would kind of be an interesting experiment to watch. So when you think about it, the censorship and the money and what's going on there, I think the original American plan has enough flexibility to push the complicated problems into the future, de-escalate the war. No one needs to keep dying. They can fix that in 5 years. Yeah, if the tendency remains, I think it goes Russian. If you were to stop it today, it absolutely looks like 5 years until they go back to Russia, and indeed Ukraine will lose its land. But Ukraine has 5 years to make the case, and America should jump in and help them do that. If America commits to making that place rich, to repopulating Ukraine, they might be able to keep it. And I do think that's a fair
Yeah.
deal, that if their destiny is still in their hands, as long as they achieve XYZ, they get to have their whole country again. Now, I don't know much, the people say the history, it was always Russia. Stalin made a mistake, he gave it too much. I don't know, but I don't know. Doesn't matter. We're in a
Yeah.
position now where power matters more than anything. This is really a proxy war between China and the United States about who really has access and control over Russian resources. That's how Russia has interpreted this
Right.
from the beginning. Everyone's in the gas station business, and it looks like at a certain point you can't grow your gas station business unless you start encroaching on other gas stations, and that's kind of what the whole thing
Right.
is. So, and in terms of
Yeah.
Russia,
I mean, I
right?
think
So
we talked. Yeah, and we talked about it last week. This seems like something you need to kick the can down the road while the rest of the region stabilizes for a while, and resources play a big part of that. And that brings us to our next story, because we talked about those rare earth minerals in China, and this has a lot to do with that, as Nvidia just got the green light to sell powerful AI chips to China again, and Wall Street immediately perked up on the news. Late last night, the Trump administration approved a new licensing framework allowing Nvidia to export its H200 AI chips into China, reopening a market that had been largely shut down since earlier export controls kicked in. The stock jumped about 2% after hours, which tells you investors were very much waiting for this headline. Under the new policy, Nvidia can sell H200 chips, but only to approved customers and only with a 25% surcharge that goes straight to the US government. Now, how many chips can be sold, who exactly qualifies as an approved buyer, and how strictly this will be enforced remains unclear. China's government responded positively, saying cooperation is preferable, while Trump said President Xi reacted favorably when informed of the shift. Now, Washington's concern, of course, is military AI. Advanced chips can accelerate weapon systems, intelligence analysis, and surveillance, which is why Nvidia's most powerful Blackwell chips are still off limits. But the H200 is a major upgrade from the weaker chips previously allowed, making this a meaningful reopening, not a symbolic one. But here's the key market angle. China represents billions in potential demand for AI infrastructure, and reopening even a partially restricted version of that market materially expands Nvidia's revenue runway. Now, that has a knock-on effect for the entire semiconductor ecosystem, from chip makers to server manufacturers to AI hardware suppliers. And at the same time, the surcharge and licensing regime add compliance costs and delays that could slow near-term demand. And politically, this move puts Nvidia back in the crosshairs of lawmakers who view any AI chip exports to China as a national security risk. So while the door is open again, it's not exactly wide open. What happens next depends on how many chips actually move, how strict enforcement becomes, and whether Washington decides this experiment went too far. For now, Nvidia has access to a market it desperately wanted back, and the entire AI trade just got a little more complicated. Bringing Nolan back. Nolan, the US just approved Nvidia to sell its H200 AI chips to China again, but only to approved buyers and with a 25% surcharge paid directly to the US Gov, which feels less like a tech policy and more like a geopolitical compromise. How are you interpreting this shift we've seen in the last 24 hours?
Well, I'm glad we're covering the Russian story and everything I just said about the gas station, because this is the dot connecting for which you preface my, you bill me as for the show, right? The dot connector. I can do that right now. We're seeing the old world transfer to the new world in this story. We went from energy dominance being the signal of global control and the biggest fight you wanted to win, and now we're seeing it's actually compute dominance. So we're moving from the old hierarchy of power to a new hierarchy of power in two different conflicts. And what America just did was really assert control over this. This was tribute. This was China having to bow to America in many ways. And so this is a totally new hierarchy of what matters in the world. And we can see in Russia that was energy dominance, and now it's compute dominance. There's a connection there. We heard Jensen Huang, the CEO of Nvidia, say it this week. That's why Bitcoin is energy converted into currency. We heard Elon Musk say it last week as well. So you can see why this conversion goes straight through Bitcoin. We're talking about the old hierarchy of power, energy, the new hierarchy of power, compute, and of course, Bitcoin is the transfer mechanism between the old conflict and the new conflict. So it looks like America has, in short order, fixed its own house when it comes to creating these products and has remained this world leader. And I saw even yesterday the great big rare earth plant opened, right? Not just announced they have money, they're going to start digging. It's open, it's producing raw materials. Not the high-end stuff yet, but the raw materials are there. We got another place in America producing high-end magnets. So it looks like a lot of things are coming together, and this is the new hierarchy of power. Compute dominance is how global power structure is organized now, and that's what I saw with this conversation between Xi and Trump in China. It is the natural progression of the Russian story and the story we think about all the time here in Bitcoin land.
Yeah, I mean, the AI race, I feel like we don't fully know where that's going, but we can all agree it seems like a race that no country can afford to lose. And that is really shaping the geopolitical world we are in today as much as anything. So it's some wild times, and it's always wild times when you have you on the show here, Nolan, as you remind me of, like, remember when you were a kid, you used to do those connect the dots and it would draw the picture at the end? That's literally what you do, but for the world. And I know there's a lot of people in our audience that gotta love it as much as I do. So make sure you check out Nolan's show, The Great Awakening. It's on 2 hours before our show here at RoxomTV News every weekday morning. So check it out. And Nolan, always an absolute pleasure to have you on the show, my friend. Thank you for breaking down the chaos of geopolitics and sharing your expertise and wisdom with us. It's always a treat.
Hank, this was a lot of fun, and too bad we don't get to do tomorrow. I won't be able to appear here, but I'll see you maybe Friday. I'll be around Friday. No, Friday's a little tough because I have the afternoon one, but I'll see you on Tuesday, all right?
Yeah, as long as there's a promise of us hanging out again in the future, I'm okay with it.
You got it, Hank. You got it, man.
See you next time, bud. Appreciate you. All right, see you. Have a good week. All right, we're taking a quick break here at RoxomTV News, but when we're back, we're going to continue. So stay tuned. More coming up right after this.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Wish you could grab cash without selling your Bitcoin? Yeah, me too. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, Hank, what makes a Ledden loan different? Well, with custody loans, your collateral stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours, no monthly payments. You can repay anytime with 0 penalties. And for transparency grown-ups actually want, proof of reserves reports every 6 months verified by a top accounting firm. The bottom line here, gang, is Ledden lets Bitcoin holders unlock liquidity without selling. And you can check them out at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. All right, gang, so we're back with more of RoxomTV news this morning. And we got some not quite breaking news, but it's big news. So Bitcoin is up big this morning, and frankly, it's about time. We started the morning below 90K, but we're now up around 95K. That's about a 4.5% to 5% increase here in just the last hour or two. And there's probably a lot of factors at play here. I think specifically that one we talked about earlier when no one was on the show was the Nvidia chip deal to China, right? That is a big piece of news in the tech sector, and it kind of reminds me of that phrase, the high tide lifts all ships. And I think that's what we're seeing now. And Bitcoin, as we know, acts very similarly to a tech stock, so we are certainly feeling some favorable tailwinds this morning, and I got a feeling Bitcoiners everywhere are very, very happy about it. Now, while they're happy about it, there are some Bitcoiners out there that, well, aren't doing so hot, and I want to talk about them in our next story here in just a second, because we got a lot to go here. So what I want to talk about now is while Bitcoin price is high, we're feeling good again, $100,000 feels back in sight, Bitcoin finally got a brand new Wall Street vehicle, and it immediately swan dove 25% right out the gate. So what am I talking about? Well, we're talking about 21 Capital, the shiny new Bitcoin treasury company backed by Cantor Fitzgerald, Tether, Bitfinex, and SoftBank, and they just debuted on the New York Stock Exchange under the ticker XXI. And instead of a victory lap, it opened at $10.74, way below the Cantor SPAC's last price of $14.27. So the first message from the market was basically, congrats on going public. Here's a discount. Now, 21 wasn't some random startup drifted in out of nowhere. It was built by an affiliate of Cantor Fitzgerald with Brandon Lutnick, son of Commerce Secretary Howard Lutnick, running the Cantor equity SPAC side, and Strike founder Jack Mallers stepping in as CEO of 21 itself. Now, on paper, it is admittedly a big swing. They're sitting on about $3.9 billion in Bitcoin, positioning themselves as the next-gen Bitcoin treasury company following the strategy Saylor playbook, but with a little twist. They want to hold a ton of Bitcoin and build financial infrastructure around it and spin up media and education to onboard more people into the asset. Ownership is heavily tilted toward the crypto old guard. Tether and Bitfinex will control the majority, with SoftBank and others as significant minority investors, and Cantor Fitzgerald acting as placement agent on roughly $500 million in senior convertible notes, plus about $365 million of common equity. Now, the problem here is the timing. Bitcoin is down more than 28% from its peak earlier this year, and digital asset treasuries have been crushed. And another SPAC-backed Bitcoin treasury, ProCap Financial, just dropped 14% on its first trading day. So you're asking public markets to get excited about a structure they've already been burned by, and a sector they're still nervous about, with a ticker that shows up already bleeding. Now, Mallers has argued this isn't a strategy clone because 21 trades at no premium to its net asset value and could be the winner for people who just want clean Bitcoin exposure. Now, that pitch might age very well if Bitcoin rips higher and the discount shrinks. But right now, the opening trade is a reminder that even in a Bitcoin world, you don't get to skip the part where public markets test your conviction first. And an exciting news that we just got this morning, a big announcement from our parent company, Roxom, just came out as they launched the world's first stock exchange fully denominated and settled in Bitcoin, allowing investors to buy and sell shares of public Bitcoin treasury companies directly in BTC. Now, the rollout begins through a global waitlist, offering immediate BTC-denominated exposure via tokenized equities in the first phase. Now, Roxom plans to onboard all publicly listed Bitcoin treasury stocks worldwide, creating the most comprehensive marketplace dedicated to BTC treasury exposure. Now, for Bitcoiners who want to accumulate more BTC, treasury-focused equities have become an important part of the investment landscape. Roxom finally brings all these companies into one place with every metric, price, and signal denominated in Bitcoin, said Borja Martel-Seward, the co-founder and CEO of Roxom. You can now invest, monitor, and measure everything in BTC without relying on fiat or traditional brokers. Now, the exchange is part of Roxom's broader strategy to build Bitcoin-native financial infrastructure. Alongside the new platform, Roxom is developing a RoxomTV, a 24/7 Bitcoin and world news-focused media network, and recently introduced BTC-denominated spot and derivatives markets tied to global equity and commodity benchmarks. So we got more to come on this story. We'll keep updating you, but it's very exciting. You need to make sure you're checking it out over at Roxom TV. All right, guys, are we going to break? Are we wrapping up? We're going to a quick break, but we'll be back with more Roxom TV news after this. In the meantime, go check out Roxom.com and see what's going on. You won't regret it. We'll be right back. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, welcome back to Roxom TV News on this fine Tuesday. And the Federal Reserve is meeting this week, and almost everyone agrees on one thing. A rate cut is coming. What they don't agree on is whether it should be happening at all. You see, today, Fed officials gather for their final meeting of the year, and Chair Jerome Powell appears set to deliver a 25 basis point cut, bringing rates down to a range of roughly 3.5% to 3.75%. Now, if that happens, it will mark the third straight cut following similar moves in September and October. Now, here's where things get a little messy though. By most accounts, as much as half of the room would prefer to pause these cuts. A growing faction inside of the Fed is worried that continued cuts risk undoing progress on inflation, which remains above the Fed's 2% target. Another group argues the opposite, that a cooling labor market, slower job growth, and weakening consumer sentiment demand more support, not less. Now, this isn't a polite disagreement. It's sharper than we've seen in past easing cycles, with officials openly split over whether this week's move should be followed by another cut early next year or a full stop. Markets, for their part, have already made their decision. A cut is fully priced in. Global equity funds have seen inflows, and investors are far more focused on Powell's tone than the actual rate change. The real question is the signaling. Is this the start of a slow, methodical easing cycle, or a one-off adjustment responding to soft data before the Fed slams the brakes again? Bond markets are watching closely. A dovish message could compress yields and weaken the dollar, lifting equities, commodities, and exporters. A cautious or conflicted message could steepen the yield curve and inject volatility if markets feel the Fed is losing confidence. There's also a communication risk here. When the Fed itself looks divided, even a small mismatch between words and expectations can trigger sharp repositioning across stocks, rates, and effects. Now, this cut may be routine on paper, but the fractures behind it are anything but. And how Powell frames the path forward will matter far more than the 25 basis points themselves. And Jamie Dimon, he went on Fox News and basically said, yeah, we debank people, but not because we hate your politics. We just debank everyone. Now, this comes after Strike CEO Jack Mallers accused JP Morgan of shutting down both his personal and business accounts with zero explanation. The crypto world immediately lit up with Operation Choke Point 2.0 alarms, and Trump jumped in, amplifying the claims, turning a banking dispute into a national drama faster than you can say negative media. Now, Dimon pushed back, saying the bank does close accounts, but not for political views or involvement in crypto. He blamed government reporting rules that force banks to react to suspected things, a phrase that somehow manages to clarify Absolutely nothing. Now, he called the rules customer unfriendly, which is a diplomatic way of saying, Congress, please stop making us look evil. Diamond even applauded the Trump administration for trying to reform debanking practices, adding that he's been asking for rule changes for 15 years. A fun reminder that regulators move at the speed of continental drift. Meanwhile, Custodia Bank's Caitlin Long warned that crypto firms may be under pressure until at least 2026, because apparently banking in America is now a playoff sport. Things escalated when Trump's media, Devin Nunes, said JP Morgan debanked them as part of a huge investigation into Trump-linked entities. Diamond responded by telling everyone to grow up and stop inventing conspiracies. He insisted that JP Morgan debanks Democrats, Republicans, religious people, non-religious people, basically anyone, but never for any ideological reasons. And yeah, I think that's the end of this one. So Diamond's point is that the bank isn't targeting political enemies here. The system itself is the problem. You're not being singled out. You're being caught in a dragnet built by regulators, enforced by banks, and misunderstood by absolutely everyone else, which honestly is the most American financial story of all time. Whew, all right, gang, that's a lot of talking for me this day, but as always, thank you so much for watching RoxomTV News here each and every morning as we are wrapping up today's show. If you like what you saw here this morning, do the thing. Make sure to like, follow, and subscribe to RoxomTV, RoxomTV News, and me and Hank at RoxomTV on all your platforms of choice. We'll be back tomorrow, same time, same place, same world news and marketplace chaos here for your entertainment enjoyment. Until then, everybody, stay safe out there, always stay informed, and make sure that you're hodling strong in these times like this. See you tomorrow.